Hi, and welcome to this webinar today. I'm Tama Willis. I run Devon's Trans-Tasman Fund, and I'd like to discuss today some recent results and positioning in the financial sector, which is a very large part of the Australian index. First of all, I'd like to talk about Macquarie. Macquarie Group is a large financial services business in Australia. And around a third of the business is an asset management business. They also have another part, which is a commodities and global markets business, which does a lot of hedging, carbon trading, and investments. And they also have Macquarie Capital is the next largest, which does a lot of principal investing along with their clients, but also advisory. Now, what's been really impressive about Macquarie is they've been positioning the business for a change in global leadership for this green investment that we're seeing at the moment and infrastructure investment. You would have seen COP26 now. The CEO of Macquarie was there negotiating deals. In the case of the asset management business, they have around $750 billion under management. Around 250 is in these new green and infrastructure investments. They currently have well over $30 billion to deploy and are raising new capital along with their partners consistently. And you look at the many trillions of dollars that need to go into this area, they remain uniquely positioned to benefit, not just in their asset management business, but in their Macquarie Capital business, where they advise and also co-invest in these areas, and along with the commodities division, where they're also looking at carbon investment and trading. So the growth opportunity over the next decade for that business is very large. They also released, along with that, their recent result, a $2 billion first half profit number, which was very strong, and we think they should deliver at least that in the second half, and they're in a medium-term upgrade cycle. So that's been a core position across most of Devon's portfolios for the last year or two. Secondly, I just mentioned the Australian banks. We had a very pleasing result from our largest bank holding, National Australia Bank, in the last week. And what was really impressive was just how they delivered across every line. Now, what we think is unique about NAB is they've exited all their non-core businesses. So now it's really just a Australian retail and business bank, along with its New Zealand business here, BNZ. And when you look at the loan growth, about 4%, that we think that will be well over 5% in this year, given the business recovery. And NAB is around, National Australia Bank is around 40% exposed to business bank. So it's the largest business bank in Australia. And I think that is a real competitive advantage. In addition, it's already cut its cost base materially from around $9 billion or a little bit over to $7.8 billion at the current time. That compares to Westpac, which is well north of $12 billion, ANZ around 9. So NAB is very lean. And as we move into what we think will be an aggressive business lending cycle in Australia, because Australia is picking up, it is ahead of New Zealand in terms of reopening. It is allowing international travellers to come in. It is allowing Australians to fly offshore. That economy is recovering very quickly, and National Australia Bank is very well positioned to, we think, continuing to deliver alpha for our portfolios. My final point would just be on another bank holding we talked about in our last monthly review, Virgin Money. We had subsequently we had a number of engagements with management of that business, and we came to the conclusion that our thesis around there being good volume growth or loan growth, we were being too optimistic on that scenario, given the market is extremely competitive in the UK at the moment. We exited that position around $3.70 per share. Subsequent to that, they came out with a disappointing set of results, a slightly change in the strategy, and the share price sold off to around $3.15. I think that's a good example why it makes sense to do fundamental bottom-up research, and why engaging regularly with the companies that you own to see if there's any strategy shift or your thesis is changing is a sensible way to do things. With that, I'd really like to thank you for listening, and look forward to chatting again soon.